Good morning, good morning. It's June 10, Wednesday, and Sahura will be with you with the short market update. Together, we're gonna check together, the economic news, financial data, economic data, geopolitical news, and whatever that moves yours and ours money these days. Again, the geopolitical tensions still same as the previous days. They are at the center of the stages. We know that last night, a few hours ago, United States attacked Iranian missile kind of the equipments in Iran inside Iran. Why? Because Iranian they attacked to American Apache helicopter on sounds like on Sunday, but we knew about that there's something happened to this, even though they told that two pilots they have been rescued successfully, but we didn't have any clear information that whether it was happened by just technical issue or the shutdown was because of Iranian attack. So anyhow, just like 3 hours ago, Donald Trump said that this helicopter had been shut down by Iranian, and so the at that as is this, so we have no reason, we have no other choice to respond to that. It's interesting. Just like 2 days ago, we knew that when the Israelis they wanted to respond to Iranian attack to the Israel, American was trying to say that okay, don't attack to them, and we are negotiating, and among the negotiations, you shouldn't do that, stuff like that. And now again, Iranian they just Iranian they couldn't stop uh, their negative effect on the negotiations and the things that happening in the Middle East. Again, they attacked the Americans, and this time the Americans, while they were trying to stop the Israelis, now this time they attacked by them. Oh, anyhow, the situation is not stable still, and that's why the market's still counting on a higher tensions. That's why you can see generally bond yields, not just in the United States, in other economies as well, is increasing. US 10 years bond yields despite slightly falling down towards 4.50 yesterday from 4.55. Again, it's up to 4.53, 4.54 almost, while in Japan, 10 years yields is up to 2.67%. That says that the market risk is high. That's why last night, especially after the economic data that we had, especially from United States, positive and nice economic data we had, these data plus political news, and the positive economic data from United States put together to tell us that the higher for longer is the main scenario. That's why, and while profit taking from tech stocks also, they help this scenario, they help this idea. That's why we can see the Nasdaq is down. Last it closed by almost 1% lower. S&P 500 is down almost 0.3%. On the other hand, Dow Jones is up by 0.2%, and small cap gained 0.4%. However, in the future market, this downward continued. Dow Jones is down 0.1% more than, and S&P 500 almost 0.3% loss. Nasdaq again is almost 0.5%, and small cap is down by 0.3%. It's all because that the US the S&P 500 VIX, or the risk of the market, is up to 19.30. That tells that still the market risk is so high, and this higher tensions for longer increase the again with the economic data increase the idea of the higher rates for longer as well. That's why you could see the just like US dollar index is increasing again, and we know that the US dollar index again is up to 19.60. That tells us that we should still be careful about the current situation. On the higher risk, also the putting the pressure on the cryptocurrency market, while the higher risk and the higher rates both are negative news for this cryptocurrency market, even though the strategy said that they bought some Bitcoin, but still the cash out from the market, the lower, just like negative cash flow that we have in the cryptocurrency market is still putting the pressure on the prices. Bitcoin again is down to 61,460, which is much lower than 63,400 that we had just yesterday. That tells us that the market still is not positive about the cryptocurrency market. This is, I told you yesterday as well, that the recovery that we had towards $64,000, it sounds like a technical recovery. It doesn't seem like a real recovery in the prices. Anyhow, the same situation we have in other markets, just like in Ethereum and BNB and other cryptocurrencies, they are all negative and they are all under pressure. With this situation, we can say that, okay, now this situation and this condition tells us that the market should be under the risk, and we could see this risk today in the Asian market as well, especially in the stocks that the AI related stock and tech related stocks like Kospi, which is losing by almost 5%, 4.6%. Nikkei is down by 1.6%. These stocks, they are much related to the AI and tech stocks because these in this index, they are much related to the to AI and tech stocks because higher rates is affecting this higher rates and expensive money is affecting the tech companies much more, while we know that there are some profit taking also we have in the markets. That's why we could see the same situation in Hong Kong, in Hang Seng as well, with 0.4% lose. On the other hand, in in the some Asian market, like in Indonesia, in India, and in China, the mainland, we had some positive reports in the stock markets. Looking at the if you look at the just let me open the my economic calendar. If you're looking at the economic calendar, where is the economic calendar? Looking at the economic calendar tells us that situation that we have right now in the market is somehow there we go. The situation that we have in the market is somehow is mixed. In some economies, especially in European economies, the negative data and negative and the weak numbers are still leading the way. While on the other hand, United States is still confirms that U.S. economy still confirm that they're doing good, especially for the consumers. And while the consumers are still spending very good money. After yesterday update, we had GDP numbers in we had in Asia we had Indonesian central bank decision. They hiked the rates by 25 basis point, but in Taiwan we had it very interesting. The Thai in Thailand, sorry, in Taiwan, right? In Taiwan, this was amazing. The export increased by almost 52%. That's their crazy. The South Korea and Taiwan, they're doing crazy this year. They're really crazy this year. While the export increased by almost 52%, the import also increased by almost 55%. And we know that the Taiwan's import is mostly the raw materials and the energy, which means these products they're going to change to final products and increase the exports even more, and that's why the Taiwan's GDP is increasing by double digits. That's still they're just like amazing economy that so far they had the best economic growth in 2026 among the world, all across the world. GDP in South Africa also increased by 1.9% in the first quarter, by 0.5% quarterly growth. On the other hand, we had trade data and some other economic data in the United States. NFIB small business optimist slightly eased from 95.9 to 95.3. But on the other hand, trade data, they were positive, increased slightly compared with the previous month, while the trade balance fell just like dropped less than expected and less than previous month to minus $55.9 billion. Sounds like it, if you look at these numbers, the trend in the past years, you can see that it's getting smaller, which means that the trade policies that the U.S. trade policies and Donald Trump government trade policies sounds like is paying off. In the housing market, existing home sales increased by 3.2% in May, good number, while in the wholesale trade, I mean the inventories wholesale or inventories actually increased by 0.6%, and trade sales increased by 2%, slightly weaker than expected. And also, last night we had API weekly report, which showed that the U.S. inventories for the oil in the private sector fell by more than 9,120,000 barrels. What does this mean? It's very important to look at this number. Pause here. We know that the Strait of Hormuz is closed. We know that to refill this, just like to fill this gap that we have in the oil market, United States is releasing its emerging inventories. And now per week, almost 8 million barrels. We have 8 million, 9 million, 7 million barrels is lowering. Now, if that continues, at least till end of this situation, the closed situation in the Strait of Hormuz, if that continues till end of the World Cup, it means that U.S. oil inventories, strategic oil inventories, will fall under 400 million barrels. That's same thing that can happen in Japan. And then even if the Strait of Hormuz opens, it takes about 5-6 months to come back to the same situation that we had before the war. Which means so far for the next at least 6 months, we can still count on the current prices, $90. Around the $90, between $90 and $90 and $100. And even if the market is open, even if the Strait of Hormuz is open, for the short period of the time, the price may can fall down. But again, because of the demand, it can increase again. Anyway, this situation, what the situation means, it means that with this current condition, higher for longer for the rates and increasing the rates can be the most possible scenario for the central banks meetings that we're going to have, especially for tomorrow's ECB meeting. We will talk about the BOC meeting later today. In Japan, producer price index, look at here, increased by 6.3% on May annually and 0.9% on the monthly basis. That tells us that the inflation is still high and that can even increase further. On the other hand, in China, inflation after several months of being a positive, inflation again dropped on the monthly basis in May by 0.1%. However, on the annual scale, this is still positive, increasing by 1.2%. But generally, it tells us that inflation still should be just like domestic demand still should be. Yeah, we had some positive progress in the domestic demand in China, but still with these numbers, we can see that the domestic demand also again should be considered more in China, while producer price index increased by 3.9%. Later today, we're going to have a retail sales number from Turkey and then industrial production from some European economies, including Italy, but the market will focus on US inflation numbers. We have NBA 30 years mortgage rates and mortgage market up that's as well, but the markets will focus on inflation. If the inflation goes further, I mean, the market is expecting the CPI and core CPI on the monthly base to increase 0.5 and 0.3% respectively. And annually, CPI is supposed to increase by 4.2% and core CPI is expected to increase by 2.9%. What these numbers tell us? These numbers tell us that the market can count on a higher for longer still. Can count on higher for longer with these numbers, and we can expect the higher numbers in the interest rate, and that can be the negative for the stock market. That can be negative for the gold. That can be positive for the US dollar. That can be positive for the bond markets, and so on. Which means that the inflation today's inflation numbers will tell us the path of the Federal Reserve for the rest of 2026. Should we expect rate hike or not? This number will be important. And also today we're going to have the central bank meeting in Canada, BOC, supposed also to publish its policy meeting and policy decisions. We are not expecting any change for this meeting. Probably we can have some hawkish tone in the statement, but not changing in the policy. This is what market expecting to see. Anyhow, these numbers are telling us that still we should wait for the just like more hawkish policies. While later today we're going to have the EIA weekly report as well, and we're expecting to see another $3 million drop in the inventories for the. I expect even more buzz drop in the inventories for in the official numbers. Generally, that can be these numbers together can still hold the oil and energy price higher, inflation higher, US dollar and interest US dollar and bond yields higher, put the pressure on the gold, put the pressure on the stock markets. That's what we're expecting to see. Looking at the charts also, just like very short, recovering the charts, we can say just like with the VIX number of 90, almost 90.20, we can say that US dollar is still positive. Even though this in the last days slightly is, but still in a bigger picture, US dollar is still at 99.58, 59, 60 is positive. That's why we can see some pressure on the gold. But again, the gold and silver, even if they slow down more, they can give you buy opportunities. On the S&P 500, Nasdaq, and the Dow Jones charts, we can see slightly downward trend that can continue, while the oil price should be again stable around $90 for WTI and crude Brent oil slightly higher or lower, but around these numbers, while the gas expected to continue around $3. On the other hand, on the cryptocurrency market, the sideway with the downward tendency is the main expected scenario. That's what's happening in the market and what we're expecting to see. Hope it was useful for you. Talk to you again tomorrow. Have a good day. Bye-bye.